Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 16th, 2025, and we're diving into LightPath Technologies' third quarter earnings report for fiscal year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. LightPath Technologies, a leader in optics and imaging systems, has just released their Q3 earnings, and there's a lot to unpack, from their strategic acquisitions to their financial performance.
Revenue and profitability overview. Let's start with the top line. LightPath Technologies reported a revenue of $9.2 million for the third quarter, marking a 19.1% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by a favorable product mix, particularly in assemblies and modules, which saw a 123% increase. This shift towards higher margin products has also contributed to a 65.9% increase in gross profit, reaching $2.7 million.
Despite the revenue growth, the company reported a net loss of $3.6 million. Can you explain the factors contributing to this loss?
Yes, the net loss is largely due to increased operating expenses, which rose by 44.3% to $6 million. This includes higher legal and consulting fees related to strategic initiatives, such as the acquisition of G5 Infrared, and increased sales and marketing expenses.
Strategic acquisitions and market expansion. And LightPath has been making strategic moves with the acquisition of G5 Infrared. How does this fit into their broader market strategy?
The acquisition of G5 Infrared is a significant step in LightPath's strategy to become a leading vertically integrated infrared imaging solutions provider. G5's offerings complement LightPath's existing products, and the acquisition has already resulted in substantial new orders totaling over $11 million.
What impact do these new orders have on LightPath's market position?
These orders, including a $2.2 million order from L3Harris Technologies, position LightPath strongly in the $9 billion infrared imaging market. The integration of G5's high-margin products is expected to drive future growth and enhance operational synergies.
Operational efficiencies and future outlook. LightPath's gross margin improved to 29.1% this quarter. What factors contributed to this margin expansion?
The improvement in gross margin is primarily due to a favorable product mix with increased revenue from higher margin assemblies and modules. This shift is part of LightPath's strategic focus on optimizing their product offerings.
Looking ahead, what are some of the key projects and opportunities for LightPath?
LightPath is advancing key defense programs, including a major missile program for the U.S. Army with Lockheed Martin. They are also leveraging their germanium-free Black Diamond solutions, which are gaining importance due to supply chain issues affecting germanium-based products.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 5 times, but LightPath reported an actual EPS of 9 cents. What does this discrepancy indicate?
The actual EPS falling short of the forecast suggests that while revenue and gross profit improved, the increased operating expenses and strategic investments have weighed on the bottom line. This highlights the challenges LightPath faces in balancing growth with profitability.
Key takeaways. In summary, LightPath Technologies has shown strong revenue growth and strategic expansion through acquisitions despite reporting a net loss. Their focus on high-margin products and key defense projects positions them well for future growth. John, any final thoughts?
LightPath's strategic initiatives are promising, but the company needs to manage its operating expenses to improve profitability. Investors should watch how these strategic moves translate into financial performance in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on LightPath's performance in the comments below.